Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive, where we try to cut through the noise and get straight to the insights you need. So, just yesterday, August 26, 2025. Wow, the crypto market saw a really dramatic flash crash.
Oh yeah, it's pretty sudden.
Apparently all thanks to a single Bitcoin whale dumping a huge amount, 24,000 Bitcoins.
That's the number. A massive amount.
And it sent the price spiraling, from $117,000 down to $109,000. Felt like an instant.
It certainly created, significant ripples across the entire crypto ecosystem.
Yeah.
What's particularly striking, though, I think, is while this one event caused all that immediate price mess, beneath that surface turbulence, we're actually seeing much more strategic, long-term shifts unfolding. Globally, too.
Right, and that's exactly why we're here. Our mission today is to really dive deep into these movements. We've got a stack of sources, market data, intelligence reports, industry announcements.
All the good stuff.
Yeah, and we're pulling out the crucial bits of knowledge. The goal really is to equip you with a more nuanced understanding of these current market dynamics, some surprising government strategies, and the unexpected ways AI is now intersecting with digital assets.
So you walk away ready for what's next.
Exactly, feeling well informed. So, okay, let's unpack this immediate market volatility first.
Let's do it. That Bitcoin whale dump, it didn't just hit Bitcoin, right? The whole crypto market felt the impact pretty much instantly.
Yeah.
The global market cap, which was sitting pretty at $4.02 trillion, dropped quite a bit, down to $3.84 trillion.
Wow.
And even Ethereum, which, had just hit a new all-time high the day before its market cap fell too, from $578 billion down to about $525 billion.
Ouch. It really shows how connected everything is.
Definitely. A stark reminder.
But here's where it gets interesting. There's a kind of counter-narrative in the data, isn't there? Despite these big price drops, overall ETF inflows for the day were actually positive.
Yeah, positive. Net $315 million slowed in.
Which seems counterintuitive. It suggests maybe a quiet confidence underneath the panic. So what does the breakdown tell us? Where did that money go?
Exactly. When you dig a little deeper, you see this really significant switch happening under the surface. Bitcoin ETFs. They saw $23 million in outflows.
Okay.
But Ethereum ETFs saw a massive $338 million in inflows.
Whoa,
That's over 10 times Bitcoin's outflows. It clearly signals a notable shift in investor confidence. It looks like many are pivoting their focus and their capital towards Ethereum.
That really speaks to that growing institutional treasury narrative around Ethereum, doesn't it?
It certainly seems that way.
And it wasn't just about the ETFs, right? Were there other signs giving us a sense of broader sentiment, especially with all that volatility? Like, what about stablecoins or DX activity?
Absolutely. Good point. We saw a noticeable increase in stablecoin volume. Now, our sources suggest this indicates investors were converting crypto into stables rather than just, cashing out to fiat.
So like a holding pattern, a wait and see.
Exactly. Not a mass exodus. And, importantly, decentralized exchanges, DEXs, they recorded this huge day, $20.19 billion in daily volume.
20 billion. That's massive.
It really is. It signals really robust on-chain activity. And the total value locked, the TVL, stayed strong at $155.48 billion. So lots happening on-chain.
Interesting. Despite those strong Ethereum inflows, though, Bitcoin's dominance actually ticked up slightly to 58.00%, while Ethereum has dropped a tiny bit to 13.70%. How do you square that?
Yeah, that's a key observation. It can happen during sell-offs. Sometimes traders, even the big institutional ones, might consolidate it into Bitcoin. It's seen as maybe the safer bet within the crypto space, even if it's still volatile.
A flight to perceived quality, perhaps.
Sort of, yeah. Even as other assets are clearly gaining traction, it does raise the question of how long that dominant shift will last, especially with a few big things potentially coming up.
Right. Speaking of upcoming factors, we're heading towards October 2025. That's roughly the 18-month mark after the last Bitcoin halving. Historically, that period often brings a new all-time high for Bitcoin. Can you quickly remind us why that 18-month mark is often significant?
Sure. So the halving event itself, it cuts the rate of new Bitcoin creation in half, right?
Yeah.
Creates a supply shock.
Okay.
Usually takes about, 18 months or so for that programmed reduction in new supply to really filter through and impact market dynamics. Often that leads to a strong price run-up.
There's always a but.
There is. Come October 31st, we have the Mt. Gox restructuring plan finally kicking in. That could potentially release a lot of stored-up Bitcoin onto the market, adding supply.
So push and pull. Less new supply, but potentially more old supply hitting the market.
Exactly. And then, completely separately, you have the potential for a Russia-Ukraine peace agreement. If that happened, it could boost overall investor sentiment everywhere, including crypto.
Okay, so lots of moving parts. What's the big picture takeaway then? A whale causes a splash, prices drop, but what's really happening underneath?
I think beyond the immediate shock, the whale dump, yes, but also the huge Ethereum ETF inflows and all that DX activity, it paints a picture of a market that's maybe more mature, more discerning, not just panicking. It suggests a strategic reevaluation. Institutional money isn't necessarily fleeing crypto, but maybe consolidating into assets they see as having high growth potential or maybe more stability within crypto. It definitely challenges that old Bitcoin or bust idea.
Yeah, investors re-strategizing, not just running for the exits.
Precisely.
That's a much more nuanced view. Okay, let's pivot now from the market mechanics to something, even more intriguing. Sovereign moves in crypto. We've got sources pointing to an Arkham intelligence report.
Yes, the UAE one.
Right. Identifying the United Arab Emirates as holding nearly $740 million in Bitcoin. That's roughly, 6,300 BTC held by the Royal Office, and another 9,300 BTC they accumulated through mining.
That's correct. It positions the UAE as the fourth largest government holder of Bitcoin.
Which is significant in itself. But what's really fascinating is the how, isn't it? The strategy.
Exactly. That's the crucial distinction here. Unlike, say, the UK or the US, where government Bitcoin often comes from seizing assets from illicit activities.
Right, from busts and seizures.
The UAE's stash seems to be primarily from strategic Bitcoin mining operations. Arkham linked 9,300 BTC specifically to Citadel mining.
Okay, and Citadel mining is?
It's owned by a company called 2.0, which in turn is majority-owned 61% by the UAE Royal Group that's controlled by Sheikh Tahnoon bin Abdel. So it's very high level.
So this isn't just market buys. They're building the infrastructure. Arkham actually identified their mining facility on Alum Island.
Yeah, an 80,000 square meter site built back in 2022 with Phoenix Group and IC. They apparently use satellite images and on-chain tracking to verify it.
Wow. And Phoenix Group is also identified as holding a massive 3.2 million Bitcoin.
That's what the report indicates, yes.
So what does this kind of infrastructure play really signal for sovereign adoption? This feels different.
It really does. When you connect the dots, it signals that the UAE is making this intentional royal-backed move into Bitcoin. It's a clear statement about their ambition to be a global digital asset hub.
And mining is a specific strategy.
Right. By leveraging their low energy costs and favorable regulations, they're setting a blueprint for how nations can accumulate Bitcoin through mining. It avoids the political headache and the market impact of trying to buy huge amounts on the open market.
Clever. Less slippage, less public scrutiny.
Exactly. And it powerfully reinforces Bitcoin as a potential strategic reserve asset. It might even put a bit of pressure on other energy-rich nations like Saudi Arabia or Qatar to think about similar long-term plays.
Interesting geopolitical angle there, and the UAE isn't the only one thinking strategically. Let's shift over to the Philippines. They're considering a bill, House Bill 421.
Introduced by Congressman Miguel Lewis, yeah. It aims to establish a Bitcoin strategic reserve.
The plan is for their central bank to acquire 10,000 Bitcoin over 5 years and then lock it up for 20 years, specifically to pay government debts. That seems bold.
It is bold, and it's worth remembering the Philippines actually had really high Bitcoin adoption rates way back in 2015, 2016.
Oh, right. I remember that.
So supporters of this bill, they talk about boosting financial stability, transparency. But critics, understandably, are warning about the volatility, the financial risks involved.
Of course, which raises a really important question given Bitcoin's price now around $109,000. Would something like Ethereum or maybe even Solana be a smarter or at least more accessible choice for a national reserve, especially for a developing nation trying to manage debt?
That's a fantastic question, a really pertinent one. And actually, it leads us perfectly into our next topic, Solana's own institutional play.
Ah, yes, the $1 billion Solana Treasury plan.
Right. An ambitious plan involving big names, Galaxy Digital, Multicoin Capital, Jump Crypto. They're reportedly aiming to raise $1 billion.
$1 billion.
To build the largest treasury dedicated exclusively to Solana, with Kana as the lead banker.
Okay, so what's the strategy here? It's backed by the Solana Foundation too, right?
It is. The plan seems to involve acquiring a publicly traded entity, specifically to hold and focus on Solana as a strategic asset. The thinking, or maybe the hope, is that this could really position Solana for its price to, potentially go off the charts.
A very deliberate move to boost Solana's institutional cred.
Absolutely. Cement its standing.
So what makes Solana appealing for this kind of treasury play, especially compared to, say, Bitcoin at its current price?
Well, I think one immediate factor is just the price accessibility. Solana's around $168 right now. Bitcoin's $109,000.
Big difference.
Huge difference. It makes SOL much easier for smaller firms or even larger ones diversifying to acquire and hold on their balance sheets without quite the same level of risk from sharp price swings.
And there's the staking aspect too, right, with proof of stake?
Exactly. Holding proof-of-stake tokens like Solana or Ethereum lets these firms become validators. They can stake their holdings, help secure the network, and earn rewards. So it's potentially yield-generating, not just about price appreciation.
Okay, so this inevitably raises the big question, the one I'm sure a lot of people are thinking. Could this $1 million Solana treasury actually start shifting institutional focus away from Ethereum?
Yeah, that's the billion-dollar question, isn't it? Look, Ethereum currently dominates. It has the deepest liquidity, a mature DeFi ecosystem, regulatory momentum with the ETFs.
Right, it's the incumbent.
It is. But a $1 billion dedicated Solana fund creates a really strong signaling effect. It positions Solana clearly as a strategic asset with serious long-term backing.
Helps smooth volatility, builds confidence.
Precisely. It could absolutely help validate Solana as an institutional-grade asset. And it directly challenges that narrative that Ethereum has a kind of monopoly as the only institutional smart contract chain. Adds competition.
And it's not just Bitcoin, Ethereum, or Solana getting this treasury attention, is it? We're seeing broader diversification.
That's right. Other firms are adding other cryptos to their balance sheets. We're hearing reports of things like Litecoin, maybe $400 million held by various entities, even Dogecoin, surprisingly, with perhaps $500 million.
Dogecoin on corporate balance sheets, okay.
It seems so. What it tells us is this treasury narrative is broadening out beyond just the top few assets. It signals maybe a diversification in institutional crypto exposure, a maturing view where different digital assets might serve different strategic purposes.
Interesting. Diversification may be a sign of deepening maturity in how firms view these assets.
Yeah.
Now, speaking of maturity, or perhaps the lack thereof in some cases, let's pivot to the regulatory side, starting with some issues for Binance Australia.
Right. AUSTRAC, the Australian Financial Intelligence Agency, they've ordered Binance Australia to appoint an external auditor.
Within 28 days.
Yeah, pretty tight deadline. To oversee their anti-money laundering, AML, and counterterrorism financing, CTF compliance, AUSTRAC cited things like poor reviews, high staff turnover, weak local oversight.
Doesn't sound good. And this isn't their first issue there, is it?
No, it follows past problems, including fines from ASIC, which is their securities commission, and Binance's own previous license cancellations there. It just highlights that ongoing global push for much stricter regulatory compliance everywhere.
A constant theme. Okay, that's the regulatory pressure. But shifting gears again, let's look at Dubai. We're seeing a very different story there, much more about embracing and integrating technology, right? Starting with AI in crypto education.
Yeah, Dubai is really leaning into tech innovation. Take Cointel, a UAE-based company. They just raised $7.4 million.
Led by Avalanche and SugarFam Inc.
That's right. For an AI-powered platform focused on crypto education, it integrates market insights, gamified learning, and really importantly, scam protection.
Scam protection is huge.
It really is. Their goal is ambitious.
Oh.
Onboard the next 100 million digital asset users. They're trying to tackle that low global crypto adoption rate, still below 7%, and the huge amount lost to scams, something like $30 billion since 2021.
Wow. So using AI to make crypto safer and more accessible.
Exactly. A crucial step.
But Dubai's innovation isn't just about crypto or AI, is it? They're integrating AI into their actual city infrastructure, like the railway system.
That's where it gets really interesting, I think. They're not just fostering these techs in isolation. They're implementing an AI-powered railway maintenance model.
How does that work?
Basically, the system monitors the infrastructure continuously to improve operational efficiency and safety in the transport sector. It means less reliance on old-school manual inspections.
And presumably saves money and improves lifespan.
That's the goal. They aim to extend the lifespan of the railway infrastructure and potentially cut maintenance costs by up to 25%.
25% is significant.
It is. It's already active on some Dubai metro lines, and they plan a full rollout, plus expanding it to their tram networks, too.
It really feels like they're building a smart city blueprint in real time. Makes you wonder how fast others will follow.
Well, what these different initiatives really underscore is Dubai's serious commitment to leading in both smart infrastructure and digital assets. They aren't just talking about AI and crypto, they're actively integrating and using them across diverse, real-world sectors.
Setting a benchmark.
Absolutely. Setting a benchmark for how other countries might leverage these powerful technologies moving forward.
Okay, so as we wrap up this deep dive, we've covered a lot of ground today. We started with those immediate market jitters from the Bitcoin whale.
The flash crash.
Then explored these really strategic sovereign moves, the UAE mining Bitcoin, the Philippines considering a reserve.
Big picture shifts.
Then we look at the evolving institutional game for altcoins, especially that big Solana treasury plan.
Yeah, the $1 billion fund.
And finally, we landed in Dubai, seeing their cutting-edge use of AI for both crypto education and actual train maintenance.
Right, core infrastructure.
It shows how interconnected all this is. Understanding these developments, it feels key to navigating this, well, fast-paced and pretty complex world of digital assets and emerging tech.
Absolutely. The landscape is shifting so dramatically from individual investor feelings all the way up to national strategies, and it's all happening incredibly fast.
Precisely. So the final thought for you, our listener, is this. With nations strategically mining Bitcoin, major firms building billion-dollar treasuries in altcoins like Solana, and AI becoming fundamental for everything from crypto onboarding to national infrastructure. How do these deliberate, high-level adoptions change how we think about a strategic asset or a national reserve over the next decade?
Yeah. And what other maybe unexpected digital assets might governments or big corporations start weaving into their long-term strategies next?
Something to definitely ponder as these digital tides keep turning.